And that's where, because the rates have risen so quickly, this buffer has stayed the same. And so people were previously being assessed on rates at 4 or 5% from a buffer viewpoint, now being assessed on twice as high,
twice as much,
in some cases. So what that means is where they previously could service a loan, to get a new loan is much more challenging.
Yes.
So they can continue to pay, hopefully, on the existing rate, but it's difficult to have that competition to be able to go out and negotiate a better deal, which was a normal function of the market.
Of the market, If you were a borrower to apply and secure a loan a few years ago, when rates were a lot lower, a lender might have looked at your ability to repay at 5.50%. So this allows you to borrow $700,000. Today, because of the number of rate rises we have experienced, lenders will be assessing your ability to repay at figures closer to 9%. So you might only be able to borrow $500,000. The nation's banking regulator, APRA, has suggested adjusting this affordability buffers in order to help many Australians who are trapped in a mortgage prison. Some of the major banks in Australia have taken steps towards easing the burden by lowering their serviceability buffers. This means that if you meet the criteria, you could benefit from the serviceability buffers. For borrowers who meet the criteria, this can provide a way to avoid ending up in a mortgage prison.
So we're going to go through some of the criteria in the next slide. So I guess there's another factor at play here that we're seeing as well is it's not just about refinancing, it's people are looking to buy a new home or make a new purchase. Previously may have been able to borrow, as per this example, $700,000 to buy that new home. Now,
they can get
the property market might have gone up over the last couple of years, as we've seen, particularly over the last 12 months, but borrowing capacity's gone down. So it makes it harder for some people who are, a little bit tighter on that borrowing capacity to be able to buy the same property they might previously been able to buy, which is another challenge of some of these restrictions. But the main one we're seeing, I think, is really that refinance opportunity and looking at getting a better deal.
Okay, so 3 out of the major banks have announced reductions to their serviceability buffers for refinances only, with NAB becoming the third to join these banks, followed by one of the smaller lenders, Bank West, who announced on the 14th of July that they will also be reducing their serviceability buffer. Let's have a closer look at these adjustments that the banks have made so far. So CBA is one of the first ones to drop their buffer by just 1%. NAB also will be dropping their buffer to 1%. However, they have adopted a case-by-case approach. So they will be looking at each application and will make a decision whether that is suitable for them to take on. Westpac is also a case-by-case approach in evaluating if the serviceability for refinances will lower their buffer to 1%. And Bank West has also dropped its serviceability by 1%.
No, it's just a very recent announcement, wasn't it?
Yes,
So what are some of the, obviously you said, case by case, what are some of the conditions, or how would you look at meeting those requirements?
So the conditions are that you have to show good repayment history for the last 12 months. They want to make sure that your current income and expenses, including current loans, are being disclosed and verified. The refinance must be dollar for dollar. You cannot borrow any more than what your home or investment loan is. Your loan cannot have a lender's mortgage insurance or LMI. Repayments must be lower than what you're currently paying when comparing for a like-for-like with your existing loan. Repayments must be P&I. However, Bank West is one of the lenders that will consider interest-only repayments if it's for an investment loan. They won't consider it if it's for a home loan. It's only for investment purposes.
So they're not particularly onerous requirements if you're looking for a straight refinance
No,
and you've been meeting your repayments, but there are a couple of extra steps that will be expected to be put through. And I think as we touched on, this is really, I think, in response to APRA's concern about, it was fairly anti-competitive environment, really, because it was meaning a lot of people didn't have the options. So banks could potentially have, carte blanche to put the rates in as they wanted to, not giving people a lot of flexibility. So they wanted to open that up to a bit more competition. And the bigger banks are probably in a stronger position, given their flow of business and access to credit to really influence that in the short term.